The top 5 worst Warren Buffett investments ever will be discussed in this video. In order to receive future updates, please like this video and subscribe to our YouTube channel before continuing. Possibly the greatest investor of all time is Warren Buffett. The CEO of Berkshire Hathaway, known as the Oracle of Omaha, has demonstrated his capacity to read Wall Street like a book for many years. Forbes estimates his net worth to be close to $82 billion, placing him among the world's wealthiest individuals. Despite his expertise in investment, Warren Buffett has made a few missteps throughout the years. Buffett owns his mistakes and takes full responsibility when he doesn't meet his obligations to shareholders, in contrast to other executives who try to shift the blame on a subordinate. Number 5. Buying Berkshire Hathaway. Warren Buffett claimed that Berkshire Hathaway was the worst investment he had purchased in a 2010 interview with Becky Quick on CNBC. According to Buffett, he made his first investment in Berkshire Hathaway back in 1962, when it was still a struggling textile business. He bought a lot of the stock because he believed he would profit when other mills shuttered. Later, the company attempted to cheat Buffett out of additional funds. Buffett, who had been enraged, had taken over the business, sacked the manager, and attempted to save the textile industry for another 20 years. According to Buffett, this retaliatory action cost him $200 billion. Here's some investment advice. Don't allow your feelings influence your choices. Number 4. Purchasing Wambic Textile Company. Repeated the mistake when he bought Wambic Mills, another New England textile firm, 13 years later. According to the assets we obtained and the anticipated synergies with Berkshire's current textile company, the purchase price was a bargain, Buffett stated in his 2014 shareholders letter. Buffett said that he had made a catastrophic error in buying Wambic, as the mill had to be shut down not long after Berkshire had bought it in 1975. The most important takeaway from Buffett's terrible Wambic investment is to learn from your mistakes. If you first don't succeed when investing, try a different approach. Number 3. Investing in Tesco. At the end of 2012, Berkshire Hathaway held 415 million shares of Tesco, a retailer based in the United Kingdom. While still substantially invested, the company sold some equity. The grocery store overestimated its profits in 2014, and the shares fell. Buffett said that worries about Tesco management were the driving force for his original sell of stock, which generated a $43 million profit, in his 2014 letter to shareholders. Sadly, he took his time with the remainder of it. I'm ashamed to say that a careful investor would have sold Tesco shares earlier. By dragging my feet with this investment, I made a tremendous mistake, Buffett stated. He acknowledged the decision caused the business to lose $444 million after taxes. Making decisions quickly is the lesson to be learned from this episode in Warren Buffett history. Number 2. The Kraft Heinz Company. A Chicago-based corporation called the Kraft Heinz Company sells food and drink items. On our list of Warren Buffett's worst investments ever, it comes in at number 9. Over the last 12 months, the company's shares have provided investors with gains in excess of 35%. The 2015 merger of Kraft and Heinz, which was supported by Warren Buffett, resulted in the creation of the Kraft Heinz Company. Buffett paid $9.8 billion for a 26% interest in the multinational food corporation. Buffett acknowledged that he had bought the Kraft Heinz Company at a price that was too high for a company that was pricey and had been impacted by competition from other shops in an interview with news outlet CNBC in 2009. Since Buffett bought the stock in the Kraft Heinz Company, its value had nearly decreased by half as of 2019. Given the dividend payments and total capital gains he has yet to realize, Buffett is still in a profitable position within the company. One of the largest shareholders in the Kraft Heinz Company among the hedge funds that Insider Monkey is monitoring is the Nebraska-based investment company Berkshire Hathaway, which has 325 million shares valued at more than $13 billion. The Kraft Heinz Company is a stock that Warren Buffett owns, along with Apple Inc., Bank of America Corporation, and the Coca-Cola Company. Number 1. Using Berkshire stock to buy Dexter Shoe Company. The purchase of Dexter Shoe Co. has been one of Warren Buffett's many regrets, but in his 2014 letter to shareholders, he voiced annoyance at the manner in which he paid the $433 million purchase price. He funded the purchase with Berkshire shares rather than paying the sellers in cash. He claimed that those shares were worth $5.7 billion at the time he wrote the letter. He wrote, "As a financial catastrophe, this one deserves to be listed in the Guinness Book of World Records." Although it's unlikely that you're buying and selling million-dollar businesses, you can still benefit from Buffett's error by making sure your resources are correctly distributed. Do not withdraw funds from profitable investments in your portfolio if it is already performing well in order to gamble on a wild card. He also laments the following investments. ConchoPhillips, 51 hedge funds are shareholders. Texas-based mining firm ConchoPhillips was established in 1875. On our ranking of Warren Buffett's worst investments ever, it comes in at number 10. Over the past year, the stock has given investors a return of more than 42%. The company's main business is hydrocarbon exploration, including the search for oil and natural gas. When oil prices were at an all-time high in 2008, Buffett invested $7 billion in the business by purchasing a stake in it. However, as oil prices dropped once more, ConchoPhillips' stock declined. When he later sold his investment in the venture, Buffett suffered a loss of over $2 billion. Buffett later acknowledged that when he purchased the shares, he had been caught up in the enthusiasm of skyrocketing oil prices. With 5.3 million shares valued at more than $282 million, Washington-based investment company Fisher Asset Management leads the hedge funds that Insider Monkey is monitoring in their ownership in ConchoPhillips, NYSE. COP. Asset management company ClearBridge Investments highlighted a few stocks in its Q1 2021 investor letter, ConchoPhillips being one of them. The fund stated the following: while limiting our exposure to consumer staples and healthcare, we boosted our exposure to high-quality brands in economically delicate markets. We expanded our list of high-quality, affordable energy companies, including ConchoPhillips. We are optimistic about the company's excellent financial condition, competitive edge, and potential for an economic revival. Corporation of International Business Machines. Holders of hedge funds, 41. Founded in 1911, International Business Machines Corporation is a New York-based manufacturer of computer hardware. On our ranking of Warren Buffett's worst investments ever, it comes in at number 6. Over the course of the previous year, the stock has provided investors with gains in excess of 23%. In 2011, Buffett began investing in International Business Machines Corporation, buying 64 million shares for more than $10 billion at the time. For the following several years, he kept the stock. International Business Machines Corporation, which insisted the business would weather the storm, was hit hard in the years after the investment by a transition to the cloud from conventional IT solutions. Buffett reversed course in 2017 and 2018, selling off the majority of his IBM stock. When he sold it, the value of the shares of the IT company had decreased by more than 18% since his original purchase, while the S&P wink with tongue sticking out 500 had increased by 116%. With 3.6 million shares valued at more than $482 million, Boston-based investment company Arrowstreet Capital is the largest stakeholder in International Business Machines Corporation among the hedge funds that Insider Monkey is monitoring. International Business Machines Corporation is a stock that Warren Buffett owns, along with companies like Apple Inc., Bank of America Corporation, and the Coca-Cola Company. Asset management company Distillate Capital featured a few equities in its investor letter for Q2 2020, and one of those stocks was International Business Machines Corporation. The fund stated the following: IBM and S&P left the portfolio because they no longer met the standards for participation, with IBM leaving because of declining long-term fundamental stability and S&P going over its debt ceiling. What are your thoughts on this video? Please share your thoughts in the comments box below. If you enjoyed the video, subscribe to our channel and click the bell icon to receive more notifications.